Monetary Policy Committee retains benchmark rate and all parameters. Ogozi Okonjo-Iweala, Kagame, Elumelu seek equitable vaccine distribution, good governance. Pension Transitional Arrangement Directorate commences payment of the consequential pension increment. Plus, oil steady with investors focusing on possible return of Iranian supply. Focus of our discussion on the program is on outcome of Monetary Policy Committee meeting. This is Business Express reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us at this time, and we start by telling you that the Pension Transitional Arrangement Directorate, that is PTAD, has commenced the payment of consequential adjustments to pensioners under the Defined Benefit Scheme, DBS. This is in fulfillment of the Executive Secretary PTAD, Dr. Chioma Ejikeme's promise made when she announced President Muhammadu Buhari's approval for the implementation of the consequential adjustment to the pension benefits occasioned by the new minimum wage increase of 2019. She promised that the upward adjustment of pensioners' benefit will take effect from May 2021. Consequently, pensioners in the 4 operational departments of the Directorate, namely Civil Service Pension Department, Parastatus Pension Department, Police Pension Department, and Customs, Immigration, and Prisons Pension Department have begun to receive their accrued arrears. All recovered looted funds, whether in foreign or local currencies, are lodged into accounts created for that purpose with the Central Bank of Nigeria. Releases from those accounts are only effected with mandates from the Federal Ministry of Finance. National Assembly correspondent Lami Ali reports that the Attorney General of the Federation and the Accountant General of the Federation disclosed this to the House Committee investigating utilization and management of recovered looted funds and assets.
If indeed the National Assembly had passed the Proceeds of Crime Bill, we cannot be here scampering and indeed perhaps couching for information relating to the recovered assets, because that bill has indeed put in place an effective mechanism, both in terms of database, in terms of disposal processes and procedure.
There is a line recovery on the IGR of federal government, and we are making payment reflecting such, provision in the Appropriation Act.
We want to ensure that funds, public funds, there's transparency in the utilization of public funds, there's transparency in the management of recovered assets.
Well, the Monetary Policy Committee, MPC, has voted to retain monetary policy rate, that is the MPR, and all parameters to support the fragile economic recovery and propel productivity. Governor of the Central Bank of Nigeria, Godwin Emefiele, at the end of the committee's meeting in Abuja, called on those posing securities risks to the country to embrace the Anchor Borrowers Scheme. Let's join Leah Katung Babatunde for the details.
There are expectations that prices will rise globally as central banks around the world sustain monetary nominalization. In Nigeria, the fundamentals show a moderate recovery as the non-oil sector drove real GDP growth in the first quarter of 2021, with agriculture contributing the largest. The Central Bank of Nigeria has continued to support the federal government in the recovery process and has increased the targeted credit facility by another 100 billion naira to 400 billion naira to boost liquidity. But Governor Emefiele has some advice for bad debtors and troublemakers.
And I therefore would like to appeal to our brothers who decide that they want to live in the bushes and forests, that they should please begin to retreat, drop their arms, and come and embrace Uncle Bora's program.
On the dollar for naira extension, the bank persists that it will encourage diaspora remittances, which Nigeria is already encouraging through diaspora bond investments. The 279th meeting of the Monetary Policy Committee had all members agreeing on policy direction aimed at controlling inflationary trends.
On the CBN intervention facility to the state governments, we are engaging National Economic Council, and CBN is also insisting on its loan to be paid. But depending on the outcome of engagement between Central Bank, Finance, and National Economic Council, we will begin to take the money.
He also insists the bank has no tolerance for cryptocurrencies, but is working to see digital currency come to life in Nigeria.
Well, joining me from Lagos to discuss the outcome of the monetary policy meeting and what it means for the economy is Johnson Chukwu. He is the CEO, Cowrie Assets. Mr. Johnson, you're welcome to Business Express.
Me.
Okay. The decision to maintain stands, did you expect it, and how do you see it affecting productivity in general?
Yes, I quite expected it. I had actually predicted that they are going to maintain rates at current levels. And these are the reasons behind that. Just like the central bank governor said, we are dealing with a policy dilemma, a situation where, though inflation has moderated from 18.17% to 18.12%, that moderation is very timid or very slight. And then the growth of 0.51% was also very fragile. So it would have been very difficult for the Monetary Policy Committee to either have tightened or to loosen. Tightening would mean that the economic growth of 0.15% could have actually been endangered, and the country could slip back to recession. Loosening also would mean that the gain we are seeing in inflation management may be lost. So I rates, and which is what they did. As it relates to what the implication for the economy, we are going to see, hopefully, that some of the policies being implemented by the federal government and monetary policy, the monetary authority, the central bank, will be allowed time to gain traction, so that the recovery we saw in the economy will hopefully speed up beyond the current 0.15% we saw at GDP growth rate in first quarter of 2021. I'm also hopeful that the moderation we saw in inflation rate will also continue in the coming months, so that we could have inflation under control.
So are you saying that maintaining this stance, which we've had for like the fourth time, is actually responsible for the level of recovery that we're experiencing, though marginal?
Yes. You would look at the fact that, look, sometimes there's what they call lag effect in economic policies. When you implement a policy, it takes some time for that policy to gain traction, to be transmitted across the entire value chain of the economy or through the transmission channels. So, and that's why sometimes you need to keep rates or hold on to policies and wait until the effect of the policies begin to manifest. So the fact that we've had rates for the past 4 months was expected, because some of the policies that were implemented at a period of global economic upheaval would needed time to really become effective.
Okay, if you look at it, the governor, no doubt, that is the governor of Central Bank, had a lot to say yesterday. How related is security with economy?
Interestingly, security is highly related to the economy. Economic performance cannot be divorced from security situation. Let me give you some classical examples. If you look at Nigeria's current macroeconomic environment, and you look at the Q1 2021 GDP performance of growth of 0.51%, and you decompose those factors to go to the different sectors, agriculture, which is the largest contributor to the economy, which accounts for 22.35% of our entire economic activity, actually grew at a slower rate. In Q4 2020, that is the last quarter of 2020, agricultural sector grew at 3.42%. But by the first quarter of this year, it only grew by 2.28%, which could imply that we're beginning to see the manifestation of the insecurity in agricultural activities, Because when farmers are displaced from their farmlands, when people are not going to the farms, you should expect the level of agricultural production will diminish growth in agricultural sector. That's also manifested in inflation rates. If you look at agriculture, food inflation in April, food inflation was still as high as 22.72%, though a moderation from 22.95%, but it's still at 22.72%, which is quite high. And if you look at those factors inflating food inflation, there are things like tuber, which are produced locally, things like cereals, which are produced locally. So it simply means that those who are producing those items have been suffering the effects of insecurity in the country. So insecurity cannot be divorced from economic activities. And I can also tell you there are some countries where investors can't even go to because of high level of insecurity, which we are hopeful will never get to that point.
Okay, Mr. Johnson, if you look at it, states are actually struggling, particularly state governments, to meet up with wage bills at every point in time, as though we're expecting recovery and the recovery is actually gradual. But on the issue of debts owed by states, the governor said he actually disclosed that deductions would be coming very, very soon by both the federal government and the CBN. What is your position on that?
I want to believe that the state government, many of the state government are going to find it difficult to meet such debt repayment obligation at this point in time. Principally, if you look at the allocations and you look at the finances of some of the states, many states really cannot exist without federation allocation. So when you now withdraw, because if you deducted as source, based on the fact that some of them are backed by ISPO, then when you withdraw the amount of debt they need to pay back on a regular basis or monthly basis, many states may find it difficult to meet basic services like payment of salaries and wages. I think, well, it will be a wake-up call for the states. If we want to run a federal system of government, the states should not just be politically autonomous, they also should be economically autonomous. As we have today, the states are not economically autonomous. And the fact that the federal government granted them debt relief in 2015, when the government of President Muhammadu Buhari came into power, and a lot of additional fund advancement have been gone to the states, may have, to some extent, prevented the states from actually adopting very prudent economic management policies. So one is that while they're going to go through difficulties, I'm hopeful that this will be a wake-up call for them to look at how to eliminate what we may call expenditure that are not necessary, and then trim down their bureaucracy to a level that are sustainable.
Okay, looking at support, talking about interventions by the central bank also plans to give out 100 billion, that is additional to the already 300 billion targeted credit facility. How will this be affecting the economy?
Well, as you know, central bank funding is what they might call development finance initiative. They are coming at sub-market rates. Of course, as a result of COVID, the central bank actually dropped rates to 5% from 9%. So increasing the lending from 300 billion to 100 by 100 billion to 400 billion will mean that those intervention funds will be able to reach additional people who have not been able to access such funds. And clearly, if you are able to access funding at a sub-market rate of 5% and you are investing in a productive activity, hopefully this will stimulate production in the country. And I think the central bank intervention funds manifested in the Q1 2021 GDP. If you look at, we saw an improvement in the manufacturing sector growth rate, which we have not seen for a couple of quarters. Yeah. So which means the manufacturing sector is growing. And if you even look at the manufacturing sector, cement industry alone grew by about 11%. The food and beverage sector grew by about 7% in the Q1 2021. And these sectors source their raw materials from, largely locally. which means the entire value chain of such growth will begin to manifest in the immediate future.
Okay, thank you so very much, Mr. Johnson Chukwu, CEO, Cowrie Investment, for sharing your thoughts and giving us insight on monetary and fiscal policies being taken and maintained by the Central Bank of Nigeria.
Thank you for having me.
You're welcome. Well, moving on, the Director General of the World Trade Organization, WTO, Dr. Ngozi Okonjo-Iweala, has called on global leaders to ensure expansion of production capacity, equitable rollout and distribution of COVID-19 vaccines in every country to accelerate global recovery from pandemic. Okonjo-Iweala, who spoke at the virtual Africa Day Conversation 2021 meeting, said for Africa and the entire world to recover sustainably from COVID-19 crisis, there is the need to correct the vaccine inequality, which is evident in the world presently. She said a situation where Nigeria and Africa as a continent imports 99% of its vaccines and 90% of pharmaceuticals, which has resulted to vaccinating a little portion of the population, is unacceptable. In line with the federal government drive to diversify the country's economy through agriculture, the federal government rice farm at Ikot-Isen in Akwa Ibom State is now ready for harvest. Senior Special Assistant to the President on Niger Delta Affairs, Senator Itai Enang, led federal government team to witness the harvest and processing of the rice, and Sikak Okon reports.
The rice farm is part of the federal government's grants to farmers for the cultivation of crops. Some of the farmers and federal government team commended the federal government's commitment to the success of the rice farming.
Every hands must be on deck. We want to increase the rice output so that Akwa Ibom will stand out and be one of the major rice cultivating states.
We are seeing how to produce rice in the southern part of Nigeria.
The Special Assistant to the President on Niger Delta Affairs, Senator Itaina, while inspecting the harvest of the rice, said Akwa Ibom State is blessed with fertile soil for the cultivation of rice in large quantity for consumption.
It is only very few of the loan beneficiaries that were able to have land in this place. There are other clusters where people are planting rice like this. Like you see the thresher and all these equipment that we have here, immediately it finishes threshing this quantity. When we finish harvesting, which is in the next 10 days, 1 week to 10 days, we'll finish harvesting. We are moving the thresher to another site, which is on a higher ground. And we planted it a little about 2 weeks, 3 weeks after we planted this, the same 91 days. So we don't have a risk.
The Ikot-Isen rice farm is being cultivated on 9 acres of land.
Oil prices were steady on Wednesday as concerns a possible resumption in Iranian supply would cause a glut were offset by hopes for stronger U.S. fuel demand. Brent crude futures for July gained 5 cents to $68.70 a barrel, while U.S. West Texas Intermediate crude for July was at $66.05 a barrel, which is down 2 cents. And moving on, gold prices held firm near a 4.5-month high on Wednesday as a drop in U.S. Treasury yields and a weaker dollar supported the safe haven metal. Let's take a trip to commodities market. And Asia Pacific stocks mixed. New Zealand dollar jumps following central bank announcement. Bossede Abel has details.
Hello and welcome to the global markets. I am Bossede Abel. Global Stock Market Watch shows that investors in the United States are awaiting a speech from Federal Reserve Vice Chairman on Wednesday as concerns surrounding inflation and potential tapering continue to linger. U.S. stock futures advanced in early trading Wednesday after the market rallied tailed Tuesday, with major indices ending regular session slightly lower. Stocks in Asia Pacific were mixed this Wednesday, with multiple markets in Southeast Asia closed for a holiday. The Nikkei rose 0.31% to close 28,642.19. Shanghai Composite was 0.34% higher at 3,593.36, and the Hang Seng Index also topped 0.88% at 29,166.01. Stocks in Europe are following positive sentiment from their counterparts in other continents, with most stocks posting gains. While in Africa, South Africa's JSE Africa Top 40 and Nairobi's All Share posted gains, while Tunisia's Tunidex, Ghana's GSA Composite and Namibia's overall index were lagging behind. That's the global markets review segment. I am Bossede Abel. Please stay for the concluding part of the program.
Thank you, Bossede. And moving on, the deregulation of the downstream petroleum sector and removal of subsidies on refined products, especially PMS, has been a subject of controversy in Nigeria for years. Key players in the oil and gas sector are, however, unanimous that for Nigeria to harness more value from her hydrocarbons and wool investors, deregulation is the way to go. Lydia Sampson reports.
The federal government had announced the approval of the deregulation of the downstream in March 2020. This is to save the Nigerian government spending of over ₦1 trillion yearly as subsidy payment and to allow market forces to determine the prices of the product. Ironically, the price of petrol was allowed to slide in tandem with the falling crude oil prices, with government even announcing intermittent reductions. However, with increasing global crude prices, the enforcement of anticipating pump price increase in line with market forces has continued to be resisted by Nigerians. Expert says postponing the inevitable will only compound the economic situation.
We are complaining about government when we the dealers are members of the citizenry. So we need to help ourselves to reduce the suffering of the people. That's the only thing.
If you are reviewing fuel, set it maybe in a 3 months or in any month, we'll do this. So people will know that, okay, whatever you hear, don't bother, because government have already made its status known. And then as Nigerians, we should learn to be at least tempering the way we react to all these market strategies.
Minister of State Petroleum Resources Timipe Silva had explained in different fora that increase in the price of petrol necessitated by the deregulation of the petroleum subsector will be difficult for a while, but will pay off on the long run.
You all know Mr. President's alignment with the position of the poor people in Nigeria. He has always been on the side of the poor people. And left to Mr. President, I am very certain that he will never have increased pump price.
Group Managing Director of NMPC, Melukulu Kyari, has also made it clear that bringing down Nigeria's production costs, which is one of the highest, is a must.
We have succeeded in delivering the regulation of petroleum product with all the caveats that exist on refinery revamp. But I would like to say that there are significant activities that are going on.
The non-passage of the petroleum industry bill, expert says, is responsible for lack of a clear demarcation of mandates, with motorists raising eyebrows as to who controls the price of petroleum products, the government, the market forces, or the unions.
Let's now see how the Naira is exchanging for other currencies. That wraps this edition of Business Express. Remember to keep in touch with us by sending in your comments, observations, and suggestions. Also be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now. The hashtag is BizX. Business Express returns Thursday at 9:30 a.m. Be safe out there.